Hi guys, good evening. And today we will continue our stock market series. We have discussed the candlestick chart, but we will look at more patterns now. Okay. We know that the red candle is formed when the closing is lower than the opening, and a green candle is formed where the opening is lower than the closing. That means the higher will be the closing price. In red candle, lower will be the closing price than the opening, right? Look at the numbers. You have a you have opening at 130 on day 1, but it is closing at 90, correct? So look at these two. It is, this chart represents that, right? It is opening at 90, it is opening at 130 here, but closing at below price, which is 90, right? Hence a red candle is getting formed, correct? So this way, if you reverse this order, right, if the opening is higher, let's say the closing is 130 and opening is 90, then a reverse candle will be formed. Let's say I will form this candle here in below example. What I will do, opening is 90 and closing is 130, right? So a green candle is formed. Same pattern, same kind of a candle, but you see it is red and it is green. It is bearish candle, it is bullish candle. Now you see the third kind of a candle where you have this body. You see here the body is high. It's a good shaped body, right? There is a margin, there is a delta of the share price fluctuating during the day, correct? So you see between open and closing there is a 40 rupees of fluctuation during the day, but in the last candle, in the last, you see between the opening and the closing there is only 2 rupees difference, right? So the body of the candle is very low. However, during the day there was a very a fight between the bulls and the bears. So bears were trying to bring this stock price down, and bulls were trying to pull it up till 120, but then bears again push it back below, and hence this kind of a candle is formed where opening and closing are very close to each other, right? This is called as doji candle. The third candle which we will discuss today is the hammer candle, right? Hammer candle is also called as, is a type of a bullish candle, because you see there is no top on the hammer candle, right? So the closing price is the highest price of the day, correct? The closing price is the highest price of the day. So that is how it becomes a hammer candle, correct? So you see the closing is the highest price of the day. This is called as hammer candle. It's a bullish candle because you see at the end of the day, bulls are winning because they were able to take the price to the highest point and the price get closed there, right? So it's a bullish candle, hence it is a in a green color, right? The opposite of the hammer candle is the shooting star candle, right? Shooting star candle is where the price gets closed at the lowest of the day, right? So what is the low? 90 rupees is the low. And what is the closing price? 90 rupees. But during the day, it has gone to 140, right? The bears were, bull were trying to push this stock higher and higher and higher, but they were not successful. Ultimately, the bears were able to pull the stock down, right? So we have discussed three type of candles today: doji, hammer, and shooting star. We will continue to make more videos on the stock market technical analysis and try to learn these concepts in greater detail.